If you've ever actually tried to read a 10K, that huge 100-page annual report from a big company, you know the feeling. Your brain just gets completely bogged down. All that complexity, it just turns into this dense, overwhelming fog of detail.
Yeah, it's instant information overload, isn't it? But, okay, now imagine you have this tireless, completely emotion-free research assistant, one who can read, like, thousands of pages in seconds and instantly find the exact financial ratios or the specific risk factors you're looking for. That's really the power of AI we're going to try and unlock today.
Welcome to the deep dive. We're doing a specialized deep dive today, looking at source material focused on using some pretty advanced AI tools. Things like, specialized versions of ChatGPT and NotebookLM to basically revolutionize how you can do smarter investing.
Exactly. And our mission here is to get past the simple summaries you see everywhere and give you a real actionable roadmap. We're breaking down 5 core steps today, things like sophisticated charting analysis, coding your own custom indicators even if you can't code, automating that dense data extraction from PDFs, cross-referencing legal documents, which is super important, and finally, building an auto-updating tracking dashboard. The real key takeaway here, I think, is just a radical boost in your research speed and depth.
Okay, so let's maybe unpack the foundational mindset first,
Mm-hmm.
because this is important, right? A lot of newer investors, they kind of mistakenly believe they can treat AI like some kind of oracle. They just ask, should I buy Tesla next week or something?
Right, and that expectation is, well, it's fundamentally flawed. AI is really at its most powerful when you combine it with human knowledge and, critically, market judgment. You really need to view this tech as let's say a dedicated, smart, and just relentlessly hardworking research assistant, not some kind of guru.
So it's not the decision maker itself, it's more like the processor.
Exactly. And AI solves, I think, 3 huge problems for any serious investor. First is just information overload. It can rapidly summarize the essential bits from massive reports and, news feeds. Second, the time constraint issue. It handles those repetitive jobs like gathering data points completely automatically, saves so much time. And third, maybe the most interesting, emotional decisions.
Mm-hmm.
It strictly looks at data logically.
Yeah.
That helps you avoid making choices driven purely by short-term fear or greed.
Mm-hmm. That emotional distance, that's crucial in markets, isn't it? So, okay, if AI is handling all the heavy lifting of the research side, what's left for the investor? What's their remaining most critical job?
Applying their own unique knowledge and ultimately their final judgment to all that analyzed data. That's the human element. Okay, let's jump straight into the technical side then, starting with step 1, using AI for quantitative technical analysis. And this really needs specificity. You can't just ask, what's this chart doing? We need to prompt the AI like a domain expert would.
Yeah, we looked at a really good example involving a chart for Tesla, ticker TSLA. You upload an image, one that shows common indicators like RSI, which measures the speed and change of price moves, and MASI for momentum. And then you give it this highly structured prompt.
That structure, that's the secret weapon, really.
Yeah.
We basically force the AI to produce 4 distinct components in its analysis. 1, trend and structure. So identify the main trend and find key support or resistance zones. 2, volatility analysis. Are the Bollinger Bands, the ones that track price deviations, are they contracting or expanding? Tells you about volatility.
Right. And 3 is the momentum diagnosis, specifically checking the RSI for overbought or oversold signals and looking for those MASI crossovers.
Mm-hmm. And the 4th component, this is maybe the most vital, synthesis. This forces the AI to actually put all 3 factors together for a probabilistic short-term outlook. This is where we integrate that golden rule of prompting we talked about.
Yeah.
Always break the problem down.
I noticed that 4-part structure, it makes sure the AI can't just waffle or give you some vague prediction, right?
Mm-hmm.
It has to check multiple specific boxes. And the output might highlight something really specific, like a bullish divergence.
Precisely. And a bullish divergence, that's a highly specific technical signal. It's where the stock price makes a lower low, but the RSI indicator, it doesn't follow along. It makes a higher low instead. And that signals that selling pressure might be weakening, even if the price itself is still dropping. It's a human insight, really, but delivered by machine analysis.
So how does forcing the AI to combine these specific technical indicators, how does that elevate the analysis beyond just a general summary?
It compels a highly structured, you could say, expert-level breakdown of those confluence factors. It forces rigor.
Okay, now here's where, for me anyway, it gets really interesting, especially for the quantitatively curious folks. Turning a complex trading idea into actual working Pine script code for platforms like TradingView. That's step 2. And it sounds like it's accessible even if you, like me, can't really code.
Oh, it's a total game changer for scaling up your analysis. It really is. Let's detail that bullish pullback setup strategy from the source. It's actually quite complex. It requires four conditions to be met simultaneously. First, the uptrend condition. The price has to be trading above both the 50-day and the 200-day simple moving averages, the SMAs. Clear uptrend.
Okay, makes sense. Second, the pullback condition.
Yeah.
The price needs to fall back, sort of pause, near the 20-day exponential moving average, the EMA, so the market takes a breather.
Exactly. And then come the crucial confirmation layers. Third, the healthy momentum condition. During that pullback, the RSI indicator must hold above the 40 level. This suggests sellers haven't really taken control despite the dip.
Right. And fourth, volume exhaustion. The volume on that specific signal candle, the one that might trigger the entry, it must be lower than the average volume of the previous 10 candles. So you feed those four detailed rules to the AI, and it just generates executable code that scans the market for you.
Yeah. It spits out Pine script you can plug right into TradingView. The feeling, honestly, of turning this abstract multi-part strategy into code that just runs, it's powerful.
Yeah.
Beat. Whoa. I mean, imagine scaling this kind of system across thousands of stocks instantly, running these complex screens constantly.
That sounds incredible, yeah. But, okay, if I'm not a coder myself, how much risk am I taking? I mean, couldn't the AI-generated Pine script have some subtle bug I wouldn't catch? Isn't this just trading one kind of complexity for another?
That's a fair point. It is a trade-off. To be honest, I still wrestle with prompt drift myself sometimes where the AI doesn't quite get it right. And this is where we learn the value of using different models for their strengths. You might use a model like Claude, which seems to be better at writing and fixing complex code, and then, this is non-negotiable, you must backtest it rigorously and visually verify the results on charts. You can't just trust it blindly.
Okay, that makes sense. Trust, but verify, heavily. All right, moving to step 3, automating the fundamental data extraction. Using AI to analyze those official PDF annual reports, the 10Ks. This used to take analysts days, right? Manual data entry for really rigorous work.
Oh, easily. Days. Our source material used a detailed Microsoft MSFT example here, and the key was that the prompt demanded several things way beyond just raw data. It wasn't just asking what's the revenue. That's too simple.
Right, it required extracting 4 specific core metrics: total revenue, gross profit, operating income, and R&D spending for 3 consecutive years.
Yes. And then, crucially, it had to calculate 3 specific ratios based on that data, like gross margin and operating margin, all within the same prompt request. But here's the really critical part. The prompt demanded the AI provide the exact page number from the source document for every single number it extracted.
Ah, that verification step again, absolutely key. That page number requirement, it turns the AI from just a summarizer into a precise data locator, doesn't it?
Exactly. So what's the biggest vulnerability then when you're trusting an AI to generate code or pull financial ratios directly from a PDF like that?
The risk of hallucination, basically the AI making things up, or just outright errors, which means those manual checks using those page numbers are absolutely necessary. You have to double check. Okay, moving to step 4. Deploying the AI almost like an investigative journalist, using tools like NotebookLM. Can you define NotebookLM for us quickly? Why use that specifically over maybe a general chat model when you're handling documents?
Sure. NotebookLM is specifically designed by Google to ground its responses only in the documents you provide it. It's built for source citation and research tasks. So that inherently gives it a much lower hallucination rate when you're dealing with uploaded PDFs or transcripts compared to more general models. It tends to stick to the facts presented.
Got it. So for this step, it involves some serious cross-referencing. The task in the example was comparing NVDA's earnings call transcript, which is often full of, spoken optimism and forward-looking statements. Comparing that against the static official 10K report, the legal document that details all the documented risks. A very different tone, usually.
Exactly. And the investigative prompt for NotebookLM broke down into 3 really powerful parts. First, optimism versus reported risks. So compare the CEO's talk of, say, unprecedented demand directly against specific enumerated risks listed in the 10K, things like customer concentration or known demand fluctuation risks.
Okay. Second, supply chain nuance. Cross-check those general mentions of supply chain in the upbeat call against the really detailed dependencies, specific suppliers, or maybe geopolitical risks that are listed way down in the 10K's disclosures.
And third, the competitive moat. Compare the CEO perhaps claiming a stronger than ever competitive moat against the explicit competitors and the stated strategy you find in the 10K's official competition section. They have to list that stuff.
Wow. So this method really turns the AI into an investigator, doesn't it? Uncovering potentially critical differences between the public relations narrative from management and the legally required filings.
It does. So why is that cross-referencing, specifically comparing the official 10K against the often more upbeat earnings call? Why is that so essential for proper investor due diligence?
Well, it helps you identify those potentially unaddressed risks, things that could seriously challenge the rosy narrative management might be painting. It's about finding the gaps. Okay, so we've covered analysis and investigation. Now let's talk about automating the tracking itself. That's step 5, building a live dashboard. We can actually use AI to write Google Apps script code and build an auto-updating dashboard right there in Google Sheets.
Yeah, exactly. We asked the AI in the example to write a specific function called update financials. And this function, it basically iterates through a list of stock tickers that you provide in your sheet. And it automatically populates 4 key data points using the built-in Google Finance function. Things like current price, PE ratio, the 52-week high, and market cap.
That's fantastic. Just pure automation, saving you that tedious manual data check every single morning.
Yeah.
And this brings us back nicely to step 6, these advanced techniques, which involves using different AI models for their respective strengths.
Yeah, it's really essential to choose the right tool for the right job. You don't use a hammer for a screw, right? Use NotebookLM, as we said, for summarizing and pulling exact quotes from your uploaded documents because of that grounding strength, that low hallucination rate. Then maybe use a model like ChatGPT for more creative brainstorming, exploring ideas, asking what-if scenarios where its broader knowledge base is actually helpful.
Right. And as we mentioned earlier, you might lean towards something like Claude for writing and especially debugging complex code, like that PineScript example, where its strength in handling longer context windows really pays off.
hmm And all of this just reinforces that fundamental truth, our golden rule, which is step 7. Always be specific and break down the problem. Break it into sequential, specific tasks for the AI. Avoid asking one huge general question and just hoping for the best. That's how you end up with generic, unhelpful answers. Specificity is key.
Okay, so beyond just the raw speed increase, how does automating all this repetitive data collection, how does that really impact an investor's allocation of their valuable time and focus?
It frees up so much mental energy, allowing you to focus almost solely on the high-level deep analysis and, crucially, the application of your own judgment. Less drudgery, more thinking. Okay, let's try and wrap up with some really practical guidance here. We absolutely must emphasize 2 key mistakes that even, experienced investors can make when they start adopting these powerful tools. First, and this is huge, do not ask AI for direct investment advice. It simply lacks your personal financial context, your goals, your risk tolerance. It doesn't know you.
Right. And second, as we've kept stressing throughout this, don't trust the numbers 100%, especially initially. Always double-check critical financial data points like revenue or profit or margins against that verified page number in the original report. You have to treat the AI output as a really powerful, synthesized first draft, not the final word.
Exactly.
No.
What you should be doing, though, is using AI to radically expand your knowledge base. That's where the power lies. Use it to speed up your research dramatically, to quickly find correlations you might have missed, and to explore dozens, maybe hundreds, of companies that you could never humanly manage to analyze on your own timeline. It's about breadth and speed.
Yeah. Ultimately, AI just can't replace your deep, nuanced knowledge of a business, its leadership team, its culture, or its core competitive advantage in the market. Your informed judgment, based on all your experience in that AI-assisted research, that remains the single most important part of making a truly smart investment decision.
The big idea here is pretty clear, I think. The future of AI-assisted investing, it's not about replacing human judgment at all. It's about dramatically improving human capability. Success is going to belong to those investors who learn how to ask the right, really structured questions and then rigorously verify the results the AI gives back.
So here's maybe a provocative thought to leave you with. If AI can eventually read every single 10K and write every conceivable custom indicator basically for free, what unique, perhaps non-technical edge will a really successful investor need to rely on next year or the year after? Something to think about. We really encourage you to start experimenting with these tools, asking those specific questions, and always applying that critical human judgment on top.
Thank you for sharing your sources with us for this deep dive today.